Welcome to your Mortgage Insider Update for the mid-January, January the 16th, after the Martin Luther King holiday. Markets are turning away from the positive news of last week. With semi-positive news, we had unemployment rates actually came out a little bit better, less unemployment in the economy, which is a positive, but not a positive for interest rates. We did survive that through Friday coming into the holiday week, but now opening up on Tuesday. A little bit of a pullback in the mortgage-backed security and treasury market. A lot of international news. We're going to take a look at the charts and see what is the outlook as we get into 2024, the heart of the year. So as we start off Tuesday, we have an alert to lock at midday here. Alert to lock means that interest rates are moving in the wrong direction. We can see the 10-year Treasury up 12 basis points, so not a good sign, over 4%. Psychological number, but definitely a move in the wrong direction. With mortgage-backed security, the prices are dropping, meaning that the investors are not willing to pay as much for the mortgage when they go to purchase the mortgage-backed security, and the consumer is going to result in a higher interest rate. First, we'll look at the 10-year Treasury. So we can see that we're at a 200-day moving average. We actually hit that as a ceiling so far today. So even though we are up in rates, we are still within the band of the year. So we started off very beginning of the year, end of December, with the downward trend, moved up a little bit to start the year off, and then just kind of treaded water last week. And like I said, Friday survived the jobs number that did come out a little better than expected. A lot of folks were looking at some pullback in the jobs economy, and that did not happen. But we do see that as a follow-through today. We are hoping to see this kind of cap out and stay below this 200-day average and keep interest rates, in a reasonable, sub 7% range is a great place to at least start the year and get people remotivated in purchasing real estate. We will look at the mortgage-backed security next. Mortgage-backed security, again, this is actually going to be the opposite. So as the price rises, the interest rate falls. So we've seen it pretty flat since middle of December. We've seen a high point here on December 28th. We've seen it a little bit lower. We're nowhere near the levels we were back in early December, late November. So super positive. The 25-day average, we've been trending above that average. We're just hovering right at it currently. You can see the 200-day average is just below us, along with the 100-day average. So we've got some room before we have to really worry. So this alert to lock is really just, for our current clients in contract looking to purchase homes. They need to lock in rather than float or pray for a better interest rate. What they have right now is likely in the short term going to be the best opportunity. That's what that lock alert means. So as we skip into the week here, following the Martin Luther King holiday, a little bit of news to pay attention to. We are going to get more inflation number as the week and the month rolls on here. Each Thursday we'll get more unemployment numbers as far as new claims for unemployment benefits. There's going to be market moving events going on throughout, not to mention the Middle East, where we have seen a lot of events circling around. The big worry on inflation is gasoline prices, which have been very subdued over the last couple of months. We've seen a huge pullback, even as the war in Israel has been a big concern. Now the concern is on top of that war, and because of that, the Iranian Houthi rebels that have actually shot a missile today at a U.S. ship and has definitely engaged with the U.S. military forces in the Red Sea and along the major oil routes, but not just oil. Lots and lots of goods come from Asia and come through that Middle East region. So that does not bode well for inflation, as the increased cost and the increased time it takes to get products around South Africa will cause a similar sort of logjam to what we saw during the pandemic when things slowed down. This is slowing down the delivery of goods. That raises the prices, which raises inflation. So as we start the year off and we run into those headwinds, we are seeing positive in the sense that the economy is likely pulling back, maybe not to a recession level yet, but the more pullback that we get in the economy, the more we can fight the inflation and give the Feds opportunity to lower the short-term interest rates or the federal funds rates, hopefully by mid-year. Make it a great week, and we'll talk to you soon.